Hello, friends. Today we're taking a look at CSX Corporation, ticker symbol CSX. We'll be looking at the performance of the stock in the last 5 years. We'll talk about what the company does. We'll look at the earnings report, the last one and the upcoming one, which is this week. And then we'll be looking at the fundamentals of the last 10 years and trying to find a fair value for this company. Welcome to Money Talks with Martin Reyes, where we try to learn to take care of our money and find great companies at great prices. CSX Corporation is a company that I own. It's about 2% to 3% of my portfolio. I have had a nice run on it, and I am trying to see if this is a time for me to maybe get out of the company, or if it's going to. The thing that I'm thinking is, I wonder if inflation going up again, it's going to be creating some issues for this company in the future. If we look at the last 5 days, the stock is down a little over 2%. In the last month, it's down almost 6.66%. Great number. The last year is up at 17%. I bought it somewhere around $30. So it has have a nice run. Looking back, I will have probably love to sell it at $38. But so that's what I'm looking at. Is I'm thinking, is it going to go back to 34 and stay there, or it's going to drop all the way to 30? The last 5 years has grown really nice to almost 41%. But if you see from 2020 to 2023, kind of stay flat. It had really nice runs and then drops. And that's what I'm wondering is like, is this another big drop that is coming? So maybe get out now and jump in a little later. Analysts believe that the target price for this company in the next 12 months is $37, which will be an up from these prices of close to 5.5%. They are reporting earnings this Wednesday. Is it Wednesday? Yes, on Wednesday. And they pay a dividend of 48 cents, which it's about a 1.3%. And so analysts believe that it is a buy, and that's the thing that the reason why I bought CSX, CNI, and CP is because of I did believe that the economy was going to recuperate. However, the last two reports from the Fed, it's showing interest starting to get a little hotter. So that would be something to take under consideration. I would love to hear from you. What do you think? If you have any comments about that, do you think that I'm wrong? Maybe I should just hold the company, or is this one of those companies that we should just get out and jump in a little bit later? CSX, for those that don't know, is a company. It's a railroad company. So what I like about railroads is that they have a really nice moat. In CSX, they operate from this will be the east of United States, all the way from Chicago to the coast, New York, and all the way from Florida, all the way to what's it called, Canada. So they focus on transporting a lot of grains and a lot of coal, and this is part of the reason why some analysts are worried about CSX because of the coal production and stuff like that. So let me know what you think about that. In the last earnings report, they beat by a little bit, but this is normal for some of these companies. The railroad company, they don't beat by a lot, at least not that I know of. Revenue surprise, they beat by $46 million, which out of $3.6 billion is not that much. They're looking to the analysts are looking at about the same earnings from last time, um, and just a little less revenue. In the last 90 days, they have had 3 revisions up and 8 revisions down. So when we jump in and look at the earnings reports, the last 10 years on fundamentals, we see that revenue has been growing really nice at about 7%, 6.5%. It's not huge, but it has grown. But most of that grown, as you can see, has come in the last 5 years. Before that, it was pretty flat. And um, that is a little concerning, you know. Gross profits at close to 50% is a little low. Earnings, once again, they were a little flat on the 2020, the 2014 to 2017. They had a big jump, and then after that has been growing. The last 10 years, it has grown 12%. In the last 5 years, almost 8%, with a profit margin average of 28%. Not bad. Free cash flow has exploded since 2018. It was flat before that. Um, so the last 10 years, it has grown at 17% year over year. But in the last 5 years, it slowed down a little bit, as you can see, at 6% growth. Free cash flow margins is 26%, and free cash flow yield at almost 5%. That is actually a thing that I really, really like about this is the free cash flow is really, really nice when it comes to compare with the price that you're paying for it. Um, Book value per share has been growing close to 5%, whether it's 10%, 10 years or 5 years. Return on equity at 27%, return on asset close to 9%, return on invested capital close to 14%. Those are really nice numbers. Dividend has grown about 8% in the last 10 years or 5 years. So it's very consistent growth that they have been giving us, the shareholders. If you are a dividend um, investor, I think this is a really nice company to invest for the dividend and just to let it grow. If you're just in that income time of your investing, the payout is really low at 23%. So this is a great company, I think, if you are focused on income investing. It's now their debt is a little high. It has been growing at 10% in the last 5 years, and if we were to look at the free cash flow, um, they could pay all their long-term debt at it will take them about 6 years. I like companies that are less than 6 years, less than 5 years. But the truth is, railroads are companies that they have a lot of expenses because they have to maintain the railroads, they have to maintain the equipment. It's very capital intensive. So I'm not too worried about the debt at these levels. When it comes to outstanding shares, they have been buying amazing numbers of shares. So in the last 5 years, almost a 5%. So if you look at dividend, they're giving you back a 1 point something percent, but they're growing that at 8%, and then they're also reducing the shares at almost 4 to 5% year over year. That is a very nice number. So with the amount of shares that they're buying, I will be even willing to buy this company with a discounted rate of 10% instead of my regular 15%, because I know I'm going to be getting about 5% back in shares alone. So when we look at the historical multiple valuation, before that, I need to give you my disclaimer. I'm not a financial advisor. I'm just a YouTuber. I'm just giving you my income, my ideas. It's just for educational purposes. It's my opinion. Please do not make any decisions based on the stock that I hold or whether I like it or not, whether I decide to sell or not. Make your own research, and I would love to hear you your opinion. I will encourage you to subscribe to my channel. If you can write a comment, let me know what I'm wrong when it comes to this company. Is there something that I am missing, or if you have a different theory when it comes to this company? When we look at the historical multiple valuation, a fair value is somewhere between $27 to $32 a share, which is definitely lower than what the current price is, but it's a little bit above our 52-week low. Looking at the revenue base valuation, we're looking at again at somewhere around $31 a share. Looking at the discounted earnings valuation, growing them at 9%, we are looking at somewhere between $24 to $29 per share. Free cash flow, growing them at 7%, which I think is fair. We're looking at somewhere between $36 to $40 a share. Using a more proper discounted free cash flow, growing at 7% for the next 5 years, we're looking at somewhere between $25 to $28 a share. Using the owner's earnings valuation, we're looking at $42 per share. When we put everything together, at least my valuation system discounted at 15% desired rate of return at 15%, we're looking at a price, a fair value of $32.50, which will put it somewhere close to where I bought it. And actually, this hasn't changed too much since I bought it. I mean, it has grown a little bit, and that's part of the reason why I bought it. So if I were to buy it again, if I were to use a margin of safety of 10%, I'll be willing to buy it somewhere between $30 to $29 if I didn't own it right now. I don't know, honestly, if I'm going to sell it and then wait until it goes down again to these prices. I don't know. What do you think? Let me know what you will do in my case. Would you sell it at these prices? Take the 15% earnings that you the profit that you have made, or would you just let it run to 38 again? Would you wait? Do you think that it's going down back to the $30? Let me know down in the description if you would like a copy of the valuation sheet. You can go to Buy Me a Coffee, or if you would just like to support the channel and buy me a coffee, you can go to Buy Me a Coffee, leave a comment, leave a tip, and I hope to see you in the next video.